All right, y'all, what's going on? Today's March the 12th, 2020, and the market meltdown continues for the world economy. If you guys have been watching our videos here on YouTube, you already know that we've been expecting the market in the NASDAQ, the S&P 500, as well as the Dow to continue to see weakness. And today's market news should not come as no surprise. And that was one reason on our last video, which we did on the 9th day of March. We didn't place a forecast in this space because there's still a lot of uncertainty and fogginess in the market currently in regards to how the world is going to be saved from the coronavirus. Okay, the Fed is trying to step in, the federal government is trying to step in, even the world government, the IMF, the World Health Organization, everyone is trying to figure out what can we do to ease the fears and the doubts from the population of the world, and it is not working. I mean, when you look at the price chart for the NASDAQ, the S&P 500, and then the Dow, the market is not believing none of the solutions that the Federal Reserve, the federal government, the world government, the World Health Organization, the IMF, nobody is believing that what they're trying to throw out is actually going to work for this virus. So we still have a lot of volatility to contend with for the three indexes that we're going to talk about today. All right. Now, before we do, let me remind you to make sure you hit that bell notification, like and share the video, and make sure you join us on our other social media platforms, because we like to give you advance notice of some of the things that we are grabbing from the markets. And you have to follow us on Instagram, Facebook, Twitter, and then on our own website. Make sure you join us on our website too. If you guys got any questions or comments, you can ask us those questions and comments on the weekend if you're a member of ours on our website. Okay, so now I wanted to show you this one article that just came out from USA Today. The New York Federal Reserve, now get this, injects $1.5 trillion, that's trillion with a T, into the markets to ease the fears from the coronavirus. That is massive. The dilution of money is definitely hitting the economic engine. They're trying to lubricate the engine for the economy by placing massive amount of money, $1 trillion, just to ease people's fears. And when you look at the stock market, it is not working. If $1.5 trillion is not effective in easing the market participation of the traders, I don't know what will. Unless there's a lot of things that they know that they're not telling us, i.e., this coronavirus is going to be a very long time to fix. And that is one thing that you are not hearing on the mainstream media. They're not telling you how long this situation is going to last for the world. Yes, China may be going down in terms of its confirmations of coronavirus cases, but that's only one part of the world economic engine. Who else is next? And now you have America going through its battle with this virus. And the longer it takes for a vaccine to come out, this problem will always be here. And it's going to hamper down, it's going to strangle the economic engine until a vaccine comes out. So that literally means that the world could be on the cusp of a major recession, if not a depression. Yes, a depression. Because if you and I are not able to go out and spur the economic engine, i.e., go out there and buy houses, cars, refrigerators, washing machines, clothes, whatever the case may be, if we're stuck in the house or if we're stationary, the world economic engine collapses, because the market is lopsided. You got to have consumers and producers. The producers are the businesses. The consumers are you and I, the one who go out and actually purchase these items. If one end of the seesaw is not even, the whole thing breaks. And this is literally what we're getting today in the markets. So let us go ahead and give you all an update on the NASDAQ, the S&P 500, as well as the Dow. You already know there's no hints right now of strength coming in the market for these three indexes. So literally the thing that we need to determine is how low can this market really go before the faithfulness of the market participation comes back in. So with this ascending line here that we got on the NASDAQ, we're going to change it, because look where we're trading at now. The market's not even following that. So we don't need to have this ascending line on our chart anymore. We need to formulate a support area in the market for the NASDAQ. The next area is going to be right around, I would say, this particular vicinity right here. Okay. So let me extend that out a little bit further. Right there. So we're at what, 7,200 points in the NASDAQ. $7,000 is also a logical area of support in the market in the NASDAQ. Massive weakness is being seen in the NASDAQ. Now we got one more day to end out this week, but looking at this daily price bar in the NASDAQ, logically 6,800, maybe even 6,400 points is where the market is aiming to get to for the long term. Okay. Now I got one more day. So Friday, the market can definitely get some liveliness to it, meaning move higher. And that would literally alter that support area of 6,800 to 6,400 points on the NASDAQ. But currently, yes, that is definitely something that is in the purview in the market for the NASDAQ. Okay. Let me see how much of a difference percentage profit would be if we were to place a trade into the market in the NASDAQ right now. Okay, let me see that real quick. So another 3% market movement to the downside. That's not even terrible based off what we got over the last couple of weeks in the NASDAQ. That is definitely something that is very feasible. Okay. You can tell here that there is some resistance coming in around 7,600, but a bigger area of resistance is coming in around 78. Okay, so I'm going to hold that market there in the NASDAQ, and we're going to try to see that market hit that 7,000 point area as well too. Okay, so this is what we're looking at into the market in the NASDAQ, and with so many of these entertainment industries, basketball, NBA canceled their season, NCAA is canceling their March Madness tournaments, and you can also tell that the New York mayor has canceled any events of over 500 people. So the market is still due for a lot of weakness, because many of these businesses are going to be on the cusp of filing bankruptcy, closing their doors, because there's no money coming in, because there's no buyers. So yes, we're going to continue to play this market in the NASDAQ, of continue to see lower price. Now let's check this out on the S&P 500. And you can see right here how the market in the S&P 500, let's get rid of that line there, came and it is literally came and hit that ascending line today in the S&P 500. Now, you can tell that this market has touched that line numerous times, going all the way back since 2009. That was the first time we created that ascending line. And you can see right here, 2011, it touched it again. 2016, it touched it again. 2018, touched it again. And here we are, 2020, market touched it again. Okay, so we got resistance in the market in the S&P 500 at 2,600 points. The next level would be closely around 2,800 points. Okay, now the market is clearly in a free fall today. Looking at it on the weekly time frame real quick, based off this, the last 3 weeks, I'm telling you now that the market is not forecasted to hold this ascending line. 2,400 points is where we're looking for the market to try to find some support. If not, that's going to be around 2,315. Okay, so let's go ahead and do that now in the S&P 500 to continue to see some weakness entering the market. Okay, so we got 2,400. I'm bringing it up a little bit higher. So like another 3 3/4% market movement to the downside. Like I said, in the NASDAQ, that's very doable. In the Dow, in the S&P 500 as well. Okay, now we're going to TP around 2,400 points. Ultimately, we can see another 7% market movement to the downside in the S&P 500. Scary days still ahead. All right, now 2,600 points is a shallow area of resistance, but I'm going to extend it up a little bit higher for contention of resistance as well. But most definitely, S&P 500 is giving us a lot of weakness as well. Okay, now let's take a look at the last one, which is going to be the Dow. Let's get rid of this line here as well too, because it is broken, and we are literally coming towards that ascending line right now in the Dow. I mean, currently we are still showing hints, like if we were to find some support based off the volume that comes through right here around this ascending line, then the market definitely has found the bottom. But the volume is not increasing based off what we have been accustomed to over the last 2 years or so. Okay, so let me zoom in, and again, like I said on the last 2 other indexes, the S&P 500 and the NASDAQ, based off these weekly price bars, the market in the Dow is preparing itself to break below this major ascending line, this trend that it has been in starting since 2008. Okay, the trend is almost broken, and if we break this trend in the long term for all 3 indexes, you best believe you're going to hit a recession, if not a depression. Okay, so let's go ahead and do another short in the market for the Dow, and we're going to play this on the daily time frame though. Like I said earlier, for the S&P 500, there is a shallow area of resistance. I would say around around 22,120 points. But again, I'm going to give us a small cushion to allow this market volatility to continue to play out. And we're still looking forward to weakness and movement to the downside. Okay, let me look at it on the weekly time frame. And the weekly time frame is a real hard area of some support. I don't see a very strong area of support in the market for the Dow. I really don't. It's the soft landing, the bigger area of support is right there around 18,300, almost 400 points. 18,000. Okay, we'll TP the market at the break even of like 20,000 points. So I would say like a 5% market movement to the downside, 20,300. But I'm gonna hold it down there because this is a very firm support area in the market that the Dow can find. Okay, we don't see that too much here, but we'll still TP the market around 20,000. All right, so this is it. I mean, the market is literally speaking to us based on the price charts, and it is telling you and I that the market is uncertain. They're not positive. There's no positive sentiment coming through. And all that translate is continued weakness and movement lower. Questions, comments, let us know. I'm done.